So since they last just a minute, the second quarter earnings season has for the most part concluded in the US. So earnings season is the period where public companies report on their financial performance. We are in the third quarter right now, so companies would have reported on how they performed during the second quarter. Overall, it was a strong earnings season. Earnings were mostly better than analysts expected. We saw very strong earnings growth among financials and healthcare companies, but materials and real estate were two of the industries where earnings fell. Tech earnings, particularly in the AI space, continue to attract a lot of attention from investors. And something that we saw this quarter was that the market reaction was more pronounced for companies that had negative earnings surprises compared to those that had positive earnings surprises. And for us, that indicates that there was a high level of optimism built into the price of US stocks. So even though US companies have continued to hold up really well and the US consumer is still strong, there was some mention of consumers becoming more price sensitive and looking for bargains. And we saw this in the earnings reports coming from those companies that were in the retail sector. So even though the consumer is strong, it looks like they're becoming more and more sensitive to very high prices. All in all, August was generally positive for our global funds. Year to date, our US equity fund was up 14%, while our international equity and our emerging markets fund were up 9% and 3% respectively. Bonds also saw modest gains during the year so far. Our fixed income fund was up 3% year to date. For our Barbados dollar funds, the Caribbean Growth Fund gained 4% year to date, and that is because Caribbean equities continue to be a drag on performance. Meanwhile, the high interest fund was up 3% year to date.